Now, there's still a very huge misconception about investing in the stock market. Some people think that stock market requires certain people of certain class. Some people thinks that investing in the stock market, you need to have tons and tons of cash before you could start investing in the stock market. But I'm here to tell you today that it doesn't require you to have as much money as you are thinking to start investing in the stock market. You can start with the little that you have and you could make a fortune. So starting investing in the stock market, it's one of the most effective way that you can build your long-term wealth. And on this video today, I want to give you here's why stock market can take you to financial freedom. Number one, the power of compounding. Now, a 25-year-old person, if they start investing today and they are investing 5,000 annually, and on their portfolio they are making 7%, worst case scenario, we know you can make more than that. By the time they get to 65, that 5,000 which they've been investing, either buying ETFs, either buying individual stocks, and they are getting 7% annually, by the time they reach the age of 65, which is their retirement age, that person will be having 1 million rand. This is true. It might not sound right now, but it's actually the truth. And this is simply because they started early, and every year they were investing, and as they are investing, they are getting 7% interest. And the next year you will know that it's not just only 7% interest on the money they got, but it's 7% on the money they put the previous year plus the 7% interest. So they not only make money from the money that they are making or depositing annually, that 5,000, but they also make money from the interest that they make, because they are making interest on top of interest, which this is a very powerful tool, which is why I said that person will start to invest in the stock market by the age of 25, investing 5,000 a year. I mean, let's make it practical, right? I know 5,000 might look so big to some of you, but if you have to break it down in a month, if you are to invest 420 rands per month, by the end of the year you have invested that 5,000. So can you see that it's not as difficult to invest in the stock market? I mean, even a student, I believe that the students that is getting, or that is a bursary, or that is getting financial support from parents, they can start investing in the stock market and start making this money, because 420 is what you need on a monthly basis for the next 40 years for you to get to 1 million rands. I know 1 million rands might not be valued the same way that it is being valued today because of inflation. We know money loses value due to inflation with time, but I'm telling you, you could make 1 million. It will still be worth something in the next 40 years, that's for sure. And this is because of the stock market. If you start investing in the stock market, or it is and this is the primary reason why you see a lot of the people globally, not just in South Africa, talking about investing in the stock market. So if you want 1 million in the next 40 years, all you need to do is to invest 420 rands a month or per month, that's how simple it gets. Now, the more you invest, the more money you make. So if you are to double that, guess what? In the next 40 years, if you are getting 7% annually, that is like what? 2 million rands. If you can take it to the next level, you add another 420. That's like what? 1,260. Then that will take you to 3 million, 4 million, 5 million, 6 million. You could easily make 10 million in the next, of course, 40 years if you are to start now. But the main thing here is that you need to make sure that you are disciplined. You are disciplined to the final goal, to the end goal product that is you want to see yourself reaching financial freedom investing in the stock market. So that was the first one, compounding. The second thing, time to recover for your mistakes. So if you start now, obviously there will be mistakes that you'll make along the way, but here's the good thing: you will have time to recover for your mistakes that you did. There are quite a number of mistakes that I did in the past that right now I have learned, because as I'm investing in the stock market, I get to fall off into this trap. Like, I'll be open with you. In my early stages of investing, I used to be a person that likes investing into penny shares or penny stocks, simply because they are cheap. The share price is cheap. You buy a penny stock at 5 cents, you buy a penny stock at 10 cents, and when you think, or coming to think of it, one thing that was in my mind back then, it was from 10 cents to 20 cents. It is possible because this company is in the industry which is expected to do very well. This company revenues will increase because of so and so. And guess what? Because of some of the things that the penny stocks don't disclose, or some of the missing information, some of the red flags that you will pick sometime there and you choose to ignore, it led me into losing money. So investing early allowed me to start learning from my mistakes, and right now I can safely say that I'm a better investor. I invest with more caution, and this is something that, had I not learned from that mistake, I would not be where I am in terms of growth when it comes to investing into the stock market. So starting early will give you the time to rectify your mistakes that you do as a beginner investing in the stock market, which is very, very important. When you are starting early, you can start with small amounts, right? But I can tell you something, someone that is 55 years and is watching this video and they want to start investing in the stock market, they've got 10 years to retire, meaning that they are going to be quite aggressive. They are going to go in heavily and start investing maybe even 10,000 a month to try to recover for the years that they were not investing, to try to make as much money in these last 10 years of working, so that they can try to recover the years that they were not investing. So starting early will help you invest slowly but continuously increasing based off your responsibilities, based off what you can afford, which is better than those who are starting late, 10 years, 5 years, just before retirement, and they have to be aggressive because they want to make as much as they can, because they know they've got 5 years, 10 years until they retire. So start now, start as early as you can. And when you start early, here's the thing. You realize that you don't really care about the short-term headwinds that come in the stock market, because if I'm up on the S&P 500 like 200% because I started early, or I started a couple of years back, whether the stock market crashes for 30-40%, I'm still up. I'm not affected that much because my gains are still there. I can absorb that, and I can decide to maybe add more positions or invest more onto that S&P 500 index, and guess what? I generate more. So in the next couple of years, you will not really worry about the stock market crashes, because you have been on that S&P 500 for quite some time. You have been on that ride, on that growth from that stock, from that, of course, ETF for quite some time, in a way that your gains cannot be hurt that much, because you are sitting at 200%, you are sitting at 300% based off how you were investing into that ETF, into that stock, which is something that this you can only, or this gets to be enjoyed by those that have been in the markets for quite some time. It can happen that you generate 100%, 200% in a space of 3 months, 6 months, but those are rare, right? I mean, there are not many opportunities like that out there, right? But you can get stocks that give you that. But this, what I'm telling you about starting early, it helps you wave off, or don't be worried that much about how the market, or what the short-term headwinds in the stock market are, and how it's going to affect your stock market portfolio. But rather, what you do, instead of worrying, you go look for opportunities to capitalize on the market crash, so that when it recovers again, you are good, you are solid, and you are making more money. Now, number 5, starting early, if there's another thing that will help you, it will teach you discipline, right? I mean, the kind of discipline I have when it comes to investing stocks. I mean, I can tell you now that personally, I have grown to be a quite disciplined investor, meaning that each and every month, at the end of the month, there is amount of money that, without thinking twice, as soon as I get paid, as soon as I make money from my other source of income, I know how much I'm taking into the stock market. I know how much I'm going in the markets, and therefore I don't think twice. When that money comes, I take it there, which is something that I've developed over the years. It is not something that just comes overnight. It is something that, as you start, you are going to struggle. But here's the good thing. If you start early, you are going to learn, obviously, along the way, to be disciplined, especially realizing the kind of gains that you missed because you were not disciplined enough. You should have invested, or you could have invested more into a certain stock, into a certain ETF, and now that ETF has grown by by 20-30%, and you wish you could have added more. You wish you could have been disciplined enough. So at least it teaches you that as you see that from the stocks that you could have invested more, it teaches you discipline, and you are able to rectify your mistake and come to your senses and realize that you need to be disciplined. Now, here is the last one. Investing in the stock market can help you guys in reaching your dreams early. I mean, yes, I talk about investing from 25 years to 65 years, depending on the amount. I mean, personally, I have done quite a number of things by the money that I generated in the stock market, right? And here's the thing. You remember I started this video by saying if you have to put like 420 every month in the stock market, at the age of 25, by age of 65 you can get to 1 million. And I said if you are to double, triple, and or go 4 times that amount, you can be able to generate more. Well, this is how personally I do it, right? If I have got something that, let's say I want to renovate my house, I want to do something, I want to maybe try to pay a certain amount of money towards my bond so that I finish early, what I do is that I become a bit aggressive. Instead of investing, let's say, I'll make an example of 2,000. Instead of investing 2,000 in the stock market each and every month, I can take it a step further and say, you know what, how about I add 2,000, and this 2,000 by the end of this year or by the end of 2 years, I take whatever I make, the lump sum profits, I go and pay off my bond, or I go and do this project, I go and buy the camera for my YouTube to make these YouTube videos, I go invest into my other businesses. I can decide to do that, right? But obviously I need to be more aggressive. So stock market can help you also reach your other financial goals early. Had it not be the stock market, I don't think honestly I would have maybe done certain things in my life, or I would have achieved certain things in my life. But thank God for the stock market. I was able to gain some good returns into some of my investments, which led me into me able to do certain things earlier, able to do certain things at a short space of time, which is something that it's very, very good. So it can help you fast track your, of course, financial freedom, because especially if you're a person who thinks business, who's an entrepreneur, you can think about injecting money, injecting money into your business, which will help your business do well. And as your business do well, you always, obviously, when you pay yourself, you put in money more into the stock market, and the business is doing well, the stock market portfolio is doing well, and you are making money from both sides, which is something that is very, very good. So yeah, man, this is what I do. There is money to be made, and if you're thinking you're too late, you are not too late. Don't wait until you get to 50 years. Don't wait until you get to 55 years. But if you're around that age, it's not also too late. Of course, you want to make as much, and I know you are going to be aggressive, but you will still make something. Trust me, the stock market is a place where obviously if you are investing for the long term, you will see what it can bring, or you will see the good returns that it brings to you, and you end up getting to financial freedom. I'll see you on my next video. Don't forget to like this video, subscribe, and once you subscribe, don't forget to hit or click that notification bell so that at least you get notified by YouTube every time I drop a new content. That's all from me. I wish you nothing but the best in your stock market investing journey, and God bless you all.